This video is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC and Felix Fry are not registered investment advisors. Options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. Today's trade alert is on GM. Let's take a look. All right, here we are. We land on the homepage again. We have some interesting activity up top. A lot of AMC trading, Dash. This Intel is interesting. I'm going to go to 100. Click on greater than 2 weeks. And no spreads. Start looking at what I see here. And this GM stands out only because I watch GM. It's a good indication on the EV business outside of Tesla. So let's take a look at GM. GM, the August is trading, August 35 calls are trading. And then there's August 25. So that's next week. Earnings are on October 24th. Stock was down a little bit this morning, climbing back up here. But this sticks out to 10,000 June 2024, 42 calls, 10,000 times. Here it is again, 10,500. This traded at 1108. The volume greater than the open interest. This is an opening trade, and it looked like it went on the bid side. So let's just take a look at that trade. GM 191, 32.3 on the bid side. Okay, I can kind of go with that. I'm going to check something else here. I want to see the June 42 call. So we're outside of the unshaded area. We're in the shaded area, which would lead me more towards the selling side. If they were buying, they would probably want to buy in this range. So selling, bid side, vol is up a little bit, but that's because the stock is also opened up down today and is trying to make it move back up. It's in a scary spot here, so I could see the vol being up a little bit. So why am I showing you this? Usually we're looking for buyers. Well, part of reading the tape when I'm looking at this stuff, it's not just about every trade. I want to buy this one or buy that one. I'm doing 5 trades a day. It's about reading the tape. It's about coming up with a broader picture of what's going on out there. Where's the big money flowing? If you recall last week, we saw NIO. Okay, so NIO call buying. Now, NIO call buying, we looked good at the time. Didn't hold. Okay, didn't really hold, and the stock sold off. 14.5 was our level we were looking at. Okay, so it looks good if it's above 14.5. Below 14.5, you no longer want to be in these things, right? It's how you use the options or a signal for potential this big stock move, and then you're using technicals to say, well, if that's going to happen, then this should hold. So we identified 14.5, which seemed like the right level, and after that it just dropped. If we look at Ford, we saw activity last week in Ford that I mentioned in our newsletter, Ford call buying. And I said, be careful what you see here in Ford call buying, because what I'm seeing essentially is someone selling stock and buying calls. That's not completely bearish. It's just the way that the big guys start shifting the risk reward. Instead of being long stock, they think that being long calls is better for their portfolio. It provides them better risk reward. And so I would say that it's not completely negative, but they're acknowledging that there's risk. And if you look at the Ford weekly chart, I mean, it's pretty clear that there's potentially some risk here, right? There's potentially some risk here. Let's call it the 10 line and the way the space has been acting. So we saw NIO calls that failed. We saw call buying in Ford on a day when stock was being drilled and it looked like people were selling stock. So we have that. And then today we have GM, which is also showing some danger here at the 30 level. So this is how the top guys in the world are thinking about that shift of the risk reward, that we don't want to be completely all out stock and we like the name long term and just keep buying. They are using options sometimes for leverage to the upside, but also sometimes for leverage to the downside by buying calls, right? By buying calls, they're essentially switching that risk reward. And I think it's important to acknowledge that, to understand it. GM is a fairly cheap stock if we're not going into recession. They have this self-driving vehicle out in San Francisco through Cruise that's working. But given all of that, that the world is going, that the world is going clean, you still have a stock that is, straight down and flagging here, okay, with a $30 level that if broken, this thing is going to get hit pretty hard because everyone in here who is long, because it's cheap, let's just call it the way it is, okay, is going to be thinking about selling if it breaks 30 because something is wrong. The market would be telling you that something is wrong. So if you're long 50 million shares of GM and you start selling the 42 calls when the stock is supposed to be cheap, it gives an indication that they are concerned here and they're starting to change the risk reward in GM, in Ford, but we're also seeing it today in Intel. Take a look at the Intel puts that were bought today, 50,000. Are they betting lower? Do they think Intel's going down? Not necessarily. Not necessarily. They could be switching that risk reward here. And by reading the tape here with you, I'm trying to show you there are different ways to translate what we're seeing here and what we're thinking. So here we are in GM, Ford, NIO, Tesla. Let's look at Tesla here quickly. Tesla doesn't look terrible. To me, it looks like it's doing this. And you should see buyers. Let's call it right around here. You should start seeing buyers, which happens to be exactly, you see this line I'm taking solely from this structure right here. But if I actually go back, it's interesting to see that it lines up nicely with the 215. So 238 to 215 is another 23 points, is another 10%. That's not going to feel good if Tesla's down 10%, GM, Ford start getting hit harder. But that's probably where you start seeing the buyers nibbling starting here, 230 and then 220. They should try to protect that 215 to 210 range. So the point of today is to show you GM call selling, which would indicate that they're looking to sell stock at above, let's call it the 42 range, or if it got back up there, they're trying to unwind up there. That's one. Two, collectively, with what we're seeing over the last week and a half with NIO failing, Ford failing, and call buying still, but that call buying is likely more of a switch of risk reward as opposed to, I think Ford is going to go crazy higher. It's sort of saying, I want to get out of stock, but I'll keep a little bit of exposure with calls. Tesla here is looking okay, but it's got to hold that 215, 220. If it breaks that, then then you got to reconsider what's happening in the EV space. I would start looking at the whole energy space with the market, I'd add, but the whole energy space is under pressure. You're seeing something like, end phase, which is just getting destroyed here. You're seeing things like we saw Plug this week that has gotten hit. We're seeing LAC, lithium. That chart doesn't look that great. So you're talking about a very big idea where these things should be pointing higher if we're going in that direction. But something is happening here where we're at a cliff on many of these EV names, EV related names. And I just want to point that out. That's the lesson for today. Make sure you slam that like button, ask questions, comments. I'll talk to you tomorrow.